Welcome to another episode of Coffee with Alissa. In the third installment of our real estate series, I'll be interviewing Chelsea Wagner, Senior Vice President of Revenue at Lower.com. Chelsea is a seasoned professional with a strong background in sales strategy and business development. As a member of the founding team, she played a pivotal role in building and managing the direct-to-consumer channel for Lower from its inception. With a passion for innovation, Chelsea recently led the development and successful launch of Mortgage as a Service, a groundbreaking channel that's revolutionizing the industry by forging a strategic partnership with Opendoor, the largest iBuyer in the nation. Drawing from her extensive experience and expertise in lending, Chelsea leads partnerships and sales revenue channels for Lower. Thank you so much for joining us, Chelsea. How are you today?
Yeah, thank you so much for having me. I'm great. I appreciate it. And thanks for the intro. It's a beautiful day in Columbus. So happy to be here and chatting real estate.
Same in Pittsburgh. We're grateful for sun and blue skies.
Love it. Love it. Pittsburgh native here. So you're in my hometown.
Well, it is great to meet you and have you with us. Can you tell us a little more about Lower.com and then what drew you to joining this startup?
Yeah, absolutely. I'd love to. So Lower is a fintech focused on residential financing. So we're a national brand. We're licensed in 47 states across the country. We truly believe that home ownership is the greatest wealth builder in America, but the path to get there is daunting, right? People get really excited about buying a house and owning a house, but people don't really get pumped up about the mortgage or the financing aspect of it. So we're really on a mission to make that more accessible and really make it an easy part of the home buying journey. So Lower has, through its family of companies, many different channels. We really believe in meeting the customer where they are. So we do that through our different channels of our online consumer direct, which is more of our digital brand of Lower.com. We do that through our Mortgage as a Service channel, which partners with like-minded companies that customers have, brand loyalty that need mortgage that are adjacent. We do that through our distributed retail functions as well as our TPO division, which helps small brokers around the nation as well. So we really believe in blending technology with a handshake. So we historically have always been, traditional mortgage company where we've really built a great customer experience. We built a great customer base, a great workforce, and a great product. 2 years ago, we actually raised a Series A, the largest in Ohio history, which we're really proud of. So we raised $100 million to really enhance and catapult the build of all of our internal technology. So we now have built everything that touches the customer. So we really believe in that blend to enhance the customer experience and enhance the delivery that the customer actually feels throughout that entire process, while also supporting our internal teams, but also blending that with the human. So having the human behind that really allows the borrower to have the experience of using easy technology tools, but having that person to hold their hand and guide them through the entire process and really just advise them on what homeownership means and what you can do with it. And mortgage can be complex, right? So technology can't solve for all of that. So we leverage all the best of both to make sure that we're delivering the best possible experience for the customers. And why I joined, I believe in the mission. I believe in home ownership. I believe in making it more accessible. I believe it's a great wealth builder. But really what's kept me here and what keeps me going is the growth potential and the people. I'm challenged every single day. I learn something new every single day. And I love the people that I work with. They challenge me to be better. We have a lot of fun and we're building something great. So it's been a really great almost decade now coming up on, and I'm excited for what's to come.
So what trends are you currently seeing in the housing market?
Yeah, it's a good question. So there's definitely been a lot of fluctuation over the last few years. The market has definitely been a roller coaster. Hot topic that, in our industry, in our company, just in the nation in general, is mortgage interest rates, right? So we've seen them definitely fluctuate quite a bit, even in this year and in 2020. So we've seen a lot of customers really change what that means for their affordability and what they can afford in a house. So rewind to 2 years ago when interest rates were in the 2s, 3s, creeping up into the 4s, the house that a customer could afford is much, much different than it is today when we're talking 6, 7% interest rates. So we really, try to advise on that and make sure that customers are still in a comfortable financial position to be buying even in this market. So we'll see what the Fed does, but hopefully hopefully rates start to stabilize here soon. We find that a lot of buyers have honestly become what we call like sideline buyers now, where rewind 2 years ago, they may, be moving because they want to move, or because they have to move. But now those who, are comfortable in their home, they refinanced or bought when rates were in the 2s, 3s, 4s, they're not as eager to go list their home or as eager to go move into their new home if they don't have to. So we are seeing a lot of those people kind of come back in here over the last couple of months as we've seen interest rates become more steady here as they're higher. So yeah, I mean, we'll see where things go. As far as inventory goes, it's definitely still tight. It's still tight out there. Hopefully we see that loosen up. We usually do around this time of year. May and June tend to be the hottest months that people are listing their homes. So hopefully that remains true into this year as well. And we're already starting to see it loosen up a little bit. And really we're starting to see, especially here in Columbus, some bidding wars start again. So that means the demand's out there, and a lot more activities happening. So all things considered, I think we're on the rise here, but we'll see how the rest of the summer and the rest of the year plays out.
That's interesting. I've heard similar stories here. There was a neighborhood that a friend lives in, and the house on both sides of them are selling, and they sold within a week.
Crazy.
Which is, so it's still a hot market.
Right. Yeah. My whole neighborhood is flipping right now, I swear. But it's fun.
It is. So you have a lot of resources on your website, from different calculators to articles on just about everything related to homeownership. And one of the articles I came across was on renting versus buying, which is, a common conversation that we have, whether it's younger clients or even older clients that are, thinking of maybe downsizing. So can you talk a little bit about the pros and cons of renting versus buying?
Yeah, absolutely. I'm biased. I believe in home ownership, but there also are so many pros to it. I mean, I think when you think about it, you're making a payment, right? You're making a payment, whether it's your rent or your mortgage. There's a lot of times this misconception that, a mortgage is always going to be more expensive than renting. That's not always true. And really, a lot of that depends on your market too, right? So buying a house in San Francisco is going to be night and day different than buying a house in Canton, Ohio, or Columbus, Ohio, or Pittsburgh, Pennsylvania, right? Every market's going to be a lot different of what the affordability standards look like. So that's always something to consider when people are, weighing that rent versus buy option. But if you think about it, you're making a payment regardless. Somebody's paying that mortgage, or somebody owns that home and it is able to benefit in that equity. So you're either paying your own mortgage and building your own equity, or you're paying somebody else's mortgage and building their equity. So at the end of the day, when that home is sold, whether you own it or your landlord owns it, somebody is gaining or profiting off of what those gains are. Traditionally speaking, you think 10 years, 20 years out, generally real estate's a pretty solid investment. We usually see it appreciate. So if you own that home for that long, if you're renting, your landlord seeks those benefits. When you own the home, you are the one that takes that equity. So that's one big piece of it from a financial standpoint. Some of the pros and cons as well. When you're renting, you don't have maintenance. If something breaks, you call your landlord and they come fix it. When you own your home, take it from me years ago, a couple months in, had to replace the entire HVAC. I was like, what the heck is happening? But it's part of it, it's part of what you sign up for when you own a home. So there are expenses there that should be budgeted for. And when you own your home, you can really make it your own. When you rent, you can decorate, you can have your own furniture. But when you own your home, if you want to knock a wall out and, redo your kitchen, you can do that. So it gives you a lot more flexibility in really making that space your own and making it a home. So I'm a big believer in home ownership, especially from the financial standpoint. And really, it's, one thing that I will encourage anybody listening to do is talk to a lender and just ask questions and understand what it means to buy. And are you pre-approved? And what does that even look like? Generally, it's a lot easier than a lot of people think. A lot of people think it's this big thing. Many people qualify for a home or to buy a home that don't even realize that they do.
I think kind of along those lines, you brought up a good point earlier that people were able to spend more money on the principal part of a house, during COVID when interest rates were lower. Those numbers are getting tighter now, right? So maybe you can't afford as much home as you could before. I think it's so easy, right, to try to we see what we want out there and it's like, oh, can we stretch our budget just to get that house. But it really is important to, buy a home where you can manage the monthly payment and come up with a decent down payment. But I think there are misconceptions that you always need 20% down on a home. So could you talk a little bit about that and just any other thoughts on that topic?
Yeah, that's a good call out. You don't need 20% down. So often that's another really common misconception that people have, is that you need 20% down to buy a home. I see it in articles on the internet everywhere, and it's so frustrating as a lender that understands this side of it, because I don't want people to think that. People need to know that home ownership is more accessible than having to put 20% down. There's tons of programs out there. It's just a matter of what the individual qualifies for. So some of your agency or traditional programs through Fannie Mae and Freddie Mac, as first-time homebuyers, you can put as little as 3% down. Other conventional options, as little as 5% down. There's some other, FHA options through the federal government that require 3.5% down. VA options, 0% down. USDA, which are in more, rural settings, 0% down. So there's a ton of different options out there that, people really aren't aware of. You hear this 20% and think you have to save all this money to do it. You don't necessarily. There's things that come along with that. If we're not putting a full 20% down on, say, a conventional loan, it comes with different forms of mortgage insurance most of the time. Mortgage insurance is a great thing. That's another thing that a lot of times gets a misconception in our industry. But really, mortgage insurance is a vehicle that allows people to get into a home without having 20% down. And there's ways to remove that throughout the entire process. And that's what a good advisor will coach you on and have you understand throughout your entire home ownership, journey. So yeah, I think when you think about what it does to your payment as well, it's really, really not a huge of a swing as a lot of people think. So for example, on say like a $300,000 house, for every additional 5% down payment you make, it really only changes the payment by about $100. So if we're talking 5% of a $300,000 house, we're talking $15,000, right? On a monthly basis, you're really only looking at $100. So that's where we really, as advisors, we take the approach to all of our customers of understanding what's comfortable for you on a monthly basis, right? What are you comfortable going out of the budget on a monthly basis for your housing expense? And then what do you have saved in assets? And then we'll advise them on what we feel is the best thing for their financial situation. Do they have kids heading off to college? Are they going to have car expenses? Do they have enough for the rainy day fund? All of these things that we're looking at the entire consumer holistically, and then advising on what the best path forward is. So yeah, there's a ton of different options. There's down payment assistance loans, there's home equity lines of credit. There's a million different things out there that, are options to be able to kind of form the best product possible for every individual scenario. So for anyone listening, I encourage you to check it out, because homeownership is a lot of the times much more accessible than people believe.
Thank you so much, Chelsea. I really appreciate your time and for you sharing your expertise with us. It was great to get to know you a little bit. And to our audience, thank you for watching. We look forward to the next series on health and wealth. Have a great day.